Do you know that star investor Cathie Wood gave a warning about Tesla stock? While it is true that analysts are not always 100% accurate in their predictions, there is still accuracy at some point, mainly because they base their analysis on available data. Stay tuned and keep watching to find out what Cathie Wood has to say. It is no secret that the economy is not at its best today, and that reflects in the stock prices in the market. A lot of factors affect the state of the economy, which in turn affect the rise or fall of stock prices. Even large corporations or big brands are not exempt from this. Today, you will find out what Cathie Wood has to say about Tesla stock. The recent fluctuation of stock prices, including that of Tesla, can be attributed to the recent crisis that shook the globe. The COVID-19 pandemic that swept across countries greatly affected the supply chain of Tesla and other companies when China enforced a lockdown in accordance with its zero-COVID policy. On the other hand, the Russia-Ukraine war affected the economy a lot. Now, the U.S. is faced with the threat of inflation and the possibility of a recession. In late June, Cathie Wood warned that the U.S. is already in a recession. ARK Invest CEO Cathie Wood admitted during an interview with CNBC that she had underestimated the severity of inflation and proceeded to claim that the U.S. economy is likely already in a recession. Wood blamed supply chain disruptions and geopolitical factors like the war in Ukraine for exacerbating inflationary pressures beyond what she had anticipated. She also said that a recession driven in part by mismanaged inventories had already begun. During an interview with CNBC's Andrew Ross Sorkin, Wood said, "We think we are in a recession. We think a big problem out there is inventories, the increase of which I've never seen this large in my career. I've been around for 45 years. The innovation-focused investor said inflation had turned out to be hotter than she expected due to supply chain disruptions and geopolitical risks." Wood explained that supply chain issues had led major retailers to mismanage their inventories, leading to a glut of certain finished goods, like furniture, that was in high demand during the pandemic. Even the best-managed companies in the world are having problems, she said. She added that the surge in inventory seen over the past year has been larger than anything she has seen during her 45-year career. "We were wrong in one thing, and that was inflation being as sustained as it has been," Wood said. "Supply chain can't believe it's taking more than 2 years, and Russia's invasion of Ukraine, of course, we couldn't have seen that. Inflation has been a bigger problem, but it has set us up for deflation." Wood said consumers are feeling the rapid price increases, reflected in sentiment data that's fallen to record lows. She pointed to the University of Michigan's survey of consumers, which showed a reading of 50 in June, the lowest level ever. Inflation measured by the Consumer Price Index rose 8.6% in May from a year ago, the fastest increase since December 1981. In a recent interview, Wood said, "We know that innovation in the public equity markets, not the private equity markets, has been ravaged in the last year. It's been about a year that it has been ravaged, and Raoul mentioned that when there is a change in expectations, the thought that the economy would open up and interest rates would go up, inflation would go up, but would be tamed. Last year, despite the change, the supply chain issues did not go away. That said, the fear about what inflation and interest rates are going to do has gripped the innovation space at first, and now it seems to be affecting the market a little more broadly." Wood said, "I think the fears here are going to shift from rising interest rates and higher inflation, potentially to recession especially. And you've heard me on this before because we see inventories piling up throughout the ecosystem. Innovation stocks in the public equity markets are down 50 to 75% in the last year, according to Wood." Do you think a possible recession will affect Tesla stock prices? Share your thoughts in the comments section below. What is a recession? In economics, a recession is a business cycle contraction when there is a general decline in economic activity. Recessions generally occur when there is a widespread drop in spending. It is a period of temporary economic decline during which trade and industrial activity are reduced, generally identified as a fall in GDP in 2 successive quarters. Inflation, on the other hand, is the rate of increase in prices over a given period. Inflation is typically a broad measure, such as the overall increase in prices or the increase in the cost of living in a country. Predictions of impending economic doom are certainly widespread, but most economists argue that for now, we've yet to enter a true recession. ARK Invest Cathie Wood isn't convinced. Wood, known for her big bets on innovative tech firms, said that the U.S. economy is already in the midst of a recession, but just hasn't declared it officially. To understand Wood's theory, it's important to remember that the technical definition of a recession has for years been a period with 2 consecutive quarters of negative economic growth, as measured by gross domestic product (GDP). By that definition, it is possible to find out that the U.S. economy is already in a recession when GDP data is released in the latter part of August, following the 1.4% decline in GDP seen in the first quarter. Like Wood, Wharton School of Business professor Jeremy Siegel agrees that the U.S. is already in the middle of a recession. Siegel told CNBC the economy likely contracted in the first half of the year. "I think we're actually in a mild recession." He added that indicators he is watching point to the economic slowdown continuing into the third quarter. In particular, he said data on the U.S. money supply has shown a decline, which also suggests we are getting a handle on inflation. How will a recession affect the leading EV manufacturer? Tesla has been performing well enough on the financial front over the last 2 years, driven by surging demand for electric vehicles, the production ramp of the mass-market Model Y and 3, and the opening of new production facilities. In 2021, Tesla boosted deliveries by 87% to over 930,000 units, with revenue rising by around 70%. However, investors are concerned about whether the momentum will hold up. The U.S. economy could be headed into a recession as the Federal Reserve looks to hike interest rates at a more aggressive pace to tame surging inflation. A 0.75 hike could be around the corner after the central bank hiked rates by 0.5% last month. Consumer confidence is also on the decline, as surging energy, grocery, and housing prices eat into household budgets. Tesla stock is already pricing in some of the economic pain, correcting by about 45% year to date, as investors move out of high multiple growth stocks towards safer plays. Still, a recession does not seem to meaningfully hurt Tesla. While automotive players typically see sales plummet through economic downturns, Tesla's business is expected to hold up much better. EV adoption is still in the very early stages, and demand has generally been outstripping supply for Tesla. Tesla has previously guided for over 50% delivery growth over a multi-year period, while indicating that it could approach 60% growth this year, which signals that demand growth should hold up even in the event of a downturn. Additionally, economic indicators do not point to a very deep recession this time around, with household savings rising post the pandemic and banks also remaining well capitalized. Tesla has also been getting much better at managing its costs, which put the company in a favorable position versus other automotive players. Tesla stock remains a good value at its current market price, sitting at the $700 range, trading at about 54x forward earnings. Should Tesla investors be concerned about a recession? Tesla revenues have been growing steadily at 1% year over year, with sequential growth of 20%. The company also reported its first profitable year since its 2010 IPO and is on the verge of joining the S&P 500. Despite encountering several roadblocks in 2018, Tesla's much-publicized cash problems are generally hype, and its potential is unvalued by its many critics. As for recent economic downturn, Tesla has fared quite well. Despite stock prices falling from $900 to $360 over the market freefall in February and March, Tesla is now hitting all-time highs of $1,500 plus for fun. This is definitive proof that it is well able to weather uncertain times. Despite the threat of recession, ARK Invest CEO Cathie Wood remains bullish on Tesla. In fact, by early July, Tesla is the second largest holding at ARK with an 8.2% weight. Visit Tesla stock and watch our other videos.